Hey everyone, Simon Says Money here. Welcome back to another video. Today I'll be discussing Palantir, ticker symbol PLTR. This has been a couple discussion online and I'd like to present some information. Hopefully you guys will enjoy and find this very informative. Before we get into this video, don't forget to like and subscribe. Turn on that bell notification because I post stuff on the stock market and cryptocurrency. I do my own research so we can make some money together. As a disclaimer, I'm not a financial advisor or CPA. This is for entertainment purposes only. So without further ado, let's go on with this video. Now we are going to look at the Palantir chart first. Palantir shares are again struggling for direction last week, and now as the yo-yo markets continue to stifle directional trading. Palantir shares are currently below $24 at $23.29. It was up today, March 31st, 5.67%. Palantir has been one of the most heavily debated stocks since it went public via a direct listing in September of 2020. Other than GameStop, Palantir may be the most polarizing company in fintech circles, and much of the discussion does not even touch on the firm's mysterious business. Shares are down almost 55% since the all-time high on January 27th of 2021, back when Palantir was at $45. During a recent CNBC interview, Palantir CEO Alex Karp made some comments that were sure to ruffle some feathers on Wall Street. Karp was quite clear about supporting long-term retail investors over institutional investors, which he attributes to why Palantir chose a friendlier direct listing rather than a traditional IPO. He went on to state that short-term traders should look away from Palantir as the company has a long-term vision for success and is not a stock to be day traded. CEOs that have shareholders in mind generally gain favor amongst retail investors, so Palantir should continue to be a popular stock to own. Let's watch this short clip.
I asked Palantir co-founder and CEO Alex Karp for his take on investor speculation and short-termism.
We're in this for the long haul. If you are speculating or you are, or you're thinking about the short term, there are plenty of other things to invest in. We're building the company we believe in. We're going to do it for the long haul. There'll be ups and downs. My lawyers won't let me say more than that, but it's obvious. And if you want something else, it's a huge world. Buy some other stock. Yeah. You don't have to buy Palantir. No one's forcing you. We're completely liquid. Do something else.
Last week, Palantir shares fell after the company's CEO Alex Karp warned the short-term investors. Karp said Wall Street's short-term focus is one of the most destructive, corrosive attributes of an otherwise interesting and largely functioning system. Palantir gained its momentum as a stock due to its mysterious business and anti-corporate behavior. Sure, Palantir nearly trades at 200 times 2021 profit projection, but the company is also estimating that its revenue will grow to $4 billion by 2025. So not only is it a popular stock for investors to follow, but its forward-looking growth means that it is positioned for a great long-term investment. Palantir is favored by Cathie Wood of ARK Invest. Although the overall tech stock market has been down recently, and Palantir shares though have struggled as tech sell-off, ARK still increased its holding in Palantir, as you can see from this graph. Last February, ARK W and ARK K added more and more Palantir stocks. Price over sales for Palantir around 37, which is pretty reasonable, and much lower than Snowflake's of 100. Snowflake's business is similar to Palantir's, but Palantir's is much more focused on the government area, which are usually long-term contracts. Therefore, Palantir stock is actually pretty reasonable valued compared to its peers and has the potential to rally going forward. Suppose that investors realize that Palantir's opportunity is, in my view, bigger than that of Snowflake. If Palantir were to trade at a similar multiple, the value of the company Palantir at roughly $100 billion or $55 per share. If Palantir could capture 8% of this $118 billion market, it would be worth $105 per share, assuming a 20-time revenue multiple, half of what it trades at currently. Therefore, we are long Palantir with a price of $50 in the near term and $100 in the medium term. But suppose that Palantir could capture 30% of the market share. It could be worth $400 in the long term. with the added tailwind of significant network efforts effects providing a roadmap to the future growth. Palantir's insiders have sold over 24 million shares since the stock lockup expiration in February. Once the insiders sold over 97% of the entire holdings since then, but this may not be a precursor for upcoming shareholder woes. Long-term investors may want to consider accumulating Palantir's share on price correction. Looking back at the chart, we can see that since January, it has been pretty much in a downtrend. In fact, as we know, Palantir's shares started trading in September of 2020. But a certain group of shareholders were not allowed to share their shares until February 18th, 2021. And the exact date of February 18th is this one. So after February 17th, we can see this big drop at February 18th. This candle right here, this green candle, but it actually dropped a lot. That day, it was down 7%. So this was due of their part of their share lockup agreement. As we approach this cutoff date, general expectation was that Palantir's locked investors would begin selling their shares, and this fresh supply of shares would weigh on its price for some time, combined with general market correction since mid-February, and the Wall Street bet squeeze on Palantir as well. When one stock goes up quickly, its drop may be also quick, and most of the time, more quickly, much more quickly. Palantir dropped almost 55% from its high reached in January or early February. What should we do on Palantir? Is it a buy or will it continue to drop? These insiders have every right to book profits like all the other investors. The lockup agreement prohibited these insiders to sell their holdings until February 18, 2020, and they are well within their rights to pocket some gains post this cutoff date. Also, like all other retail investors, they are not mandated by the SEC to justify why they are selling their shares. Therefore, there's nothing fraudulent with these share sales. But one of the co-founders decided to sell 97.1% of his shares, suggesting that he isn't too enthusiastic about the company's future prospects or foresees upcoming problems. Other insiders sold their shares as well, albeit to a lesser extent, which doesn't inspire much confidence for the investing community either. What should we do? The expiration of insiders' lockup on February 18th, 2021 was largely expected. This does not necessarily point to upcoming shareholders' woe. If their insiders continue to sell their shares over the next few months, that would cause some concern. Palantir is still a high-growing company, as I explained in my previous video. In fact, my first video of this channel. That has not changed by the insider sales due to expiration of lockup and market correction. As compared to other high-flying software companies such as Snowflake, Palantir shares are trading at a reasonable sales multiples. The stock is likely going to head north once market-wide panic eventually subsides. I expect that Palantir will be among the stock which will surge violently once this round of market correction is over. That's it for today's video. Don't forget to hit that like and subscribe button. Let me know in the comments your thoughts on Palantir. ARK has been adding a lot more Palantir shares, and Palantir has been getting a lot of contract within the last couple of months. So let me know in the comments. And again, thanks so much for watching, and I'll see you guys in the next one.